In this video, we're going to look at what comes out of your paycheck. So we're going to find federal tax withholding per paycheck using the IRS percentage method. We'll learn how to find the Social Security and Medicare withholding per paycheck. And we'll find the net earnings per paycheck, and then look at federal unemployment and state unemployment tax, which the employer pays that is not withheld from your paycheck. So income tax would just be a local, state, or federal tax that you pay on your income. Of course, we live in an area where we're close to other states. North Carolina and Virginia both have a state income tax, but Tennessee does not. Federal tax withholding is the required amount to be withheld from a person's pay to be paid to the federal government. So they withhold that from your paycheck, and then your employer sends that into the federal government every quarter. Your tax filing status is based on whether the employee is married, single, or head of household, and that determines what the withholding is going to be. A W-4 form is the required form to be held by the employer, and that's how they determine how much federal tax to withhold. A W-2 form, don't confuse the W-4. W-4 is what the paperwork you do when they hire you. A W-2 is what you get sometime in the spring. Usually there's a February due date, and it tells how much they withheld. You use that to file your taxes. Adjusted gross income is the income that you get when you take your gross income and take away any allowable adjustments, such as a qualifying IRA, tax-sheltered annuities, 401Ks, employee-sponsored child care, or Medicare plans. Tax-free or tax-deferred benefits. Tax-free benefits, you would not ever pay any tax on it. A tax-deferred benefit, such as an IRA or a tax-sheltered annuity, means that you can put that money aside for the future, and then you don't pay the tax on it until you use the money. So they call that tax-deferred because you're putting off paying the taxes on it. The idea is that when you retire, you'll be in a lesser tax bracket, and you won't pay as much tax on it as you would when you're earning the most in your career. So adjusted gross income would be your gross income minus any tax-exempt income. Some companies use tax tables, but many companies calculate federal tax withholding using tax rates. So that's the rate we're going to use in this course. The employer deducts a tax-exempt amount based on the number of withholding allowances that the employee claims. And remember, you would claim those by filling out a W-4 form for your employer when you get a job. The resulting amount is called the percentage method income, and we're going to use that number and look it up in a table to see exactly how much tax should be withheld. So to find the withholding tax using the percentage method, the first thing we're going to do is find the exempt per allowance amount from the withholding allowance table. And this is in section 9.2 in your textbook. I believe it's page 242. So table 1 on page 242. And we're going to identify the amount exempt for one withholding allowance according to the type of pay period. So in that table, it will say weekly, biweekly, monthly, etc., and tells you how much one withholding allowance would be. Then you would multiply the number of withholding allowances claimed by the amount found in the previous step, and then you would subtract that amount from the employer's adjusted gross income for the pay period. So here is what that table looks like. So Hattie's biweekly gross earnings are $3,125. She's single. She has no adjustments to income and claims 2 withholding allowances on her W-4 form. Find the payroll period. So it says biweekly. So this is the row we want to use in this table. So this tells us that one withholding allowance is $140.38, and she is claiming 2 allowances. So that means we will multiply $140.38 by 2. So this is the amount that's going to be tax exempt from her $3,125. So we're going to take the $3,125 minus the $287.76, and that's going to give us adjusted gross income. So the result would give us $2,844.24. Note that this PowerPoint uses the most current 2012 IRS table in this example, and your textbook on page 242 doesn't state what year it is, but it is not 2012. So the numbers, if you use that table, and the numbers in this PowerPoint will be a little bit different because the taxing amounts have changed. So we would use Table 2, which is coming up on the next slide. On your quizzes, you'll use the one on page 242 in your textbook. And we're going to look up this adjusted gross income amount, $2,844.24, paid to a single employer on a biweekly basis in that second table. So here's an example of what that table looks like, and you can tell that this is the 2012 tax rate. So she's paid biweekly, so I look down through there and I find the biweekly part of the table, and she's single, so that means I'm going to use the left side of that section. And I'm going to look up the $2,844.24 down here in this section. So $2,844 falls in between $1,442 and $3,375. So that tells me that this row right here is the one that tells me how to figure out what her withholding is. And the directions right over here tell me what to do. They say we will have to withhold for her $187.15 plus 25% of the amount over $1,442. So that means I'm going to take $1,442 off of the amount that I just looked up in the table and multiply that difference by 25%. So subtract that, multiply that by 25%, and then don't forget you still have to withhold the $187.15. So you're going to have to add that to that amount. We're looking up the amount over 1,442 but not over 3,377. So that says $187.15 plus 25% of the amount over 1,442. So when we do that subtraction, we end up with $1,402.24, which it says multiply by 25%. When we do that, we find that we need to withhold $350.56, but don't forget the $187.15 that we have to add to that. So her total withholding for federal tax would be $537.71, and sometimes on the check stub, they will abbreviate that as FIT, federal income tax. Now, if we want to find Social Security, which is called FICA because of the Federal Insurance Contribution Act that sets the Social Security deduction amount, which, since it is an act of Congress, it can change, but we know lately that an act of Congress is not so easy to come by. So it's been 6.2% for a while. But the Social Security program pays for things like old age and disability, Medicare, survivor benefits, and so forth. But the Medicare is withheld separately from other FICA benefits. So on your check, you'll see two deductions, one for FICA, and then another one will either say Medicare or sometimes it just says medical, but that will be your Medicare. The amount of the earnings currently subject to Social Security tax is adjusted gross income less than or equal to $106,800. So what that means is if you are one of the fewer people who earn more than $106,800, you don't pay Social Security on any amount over that. You just pay on the first $106,800 that you make. So to find FICA, or Social Security withholding, per paycheck, we want to remember that we have this threshold, and of course it's an act of Congress, so that can change as well. And we multiply the taxable amount by 6.2% or 0.062 to find Social Security. That's the same for everybody no matter what. It's 6.2% unless Congress decides to change it. And Medicare is always 1.45%, which is 0.0145 of the adjusted gross income. Unlike Social Security, there's no cap on the income level for Medicare, so you pay Medicare on every penny you earn. Joe's gross income is $1,654. How much does he owe in Social Security and Medicare taxes? Well, he's nowhere near the threshold, so we would just take his gross income, his $1,654, and multiply it times 0.062 for Social Security, and take that same gross income and multiply it by 0.0145 to get $23.98 for his Medicare. And again, you do Medicare and Social Security on the gross income. It's not adjusted gross income. And your employer is also paying an additional matching amount for Social Security and for Medicare. So that's not withheld from your check, but when the employer sends in whatever they withheld from their employees' paychecks every quarter, they have to double that amount, and the same for the Medicare. So they match your contribution. That means if you happen to be self-employed, you are your own employer, so your Social Security tax is 12.4% and 2.9% in Medicare. So you have to pay both pieces of it.